Good Friday evening, everybody. It is Dave at PreciseAlgorithmTrading.com. Friday, June 9th, 2023, and I'm going to start today with something I don't usually talk about. It's the VIX. The VIX is the volatility index, and I don't actually use it a bunch, but some people do. And the reason I actually even have the Bollinger Bands, which are the magenta lines that I'm highlighting here, the reason I even really have those on here is, well, it's to see when a move goes outside of the Bollinger Bands, whether it's a stock or the futures. But really, it's probably a bigger deal for the VIX. And I don't know, I'd have to decouple some things here to make this thing actually show you what the stock market does when the VIX does what it does. But um, heck, why not? I'll do that. We'll unlink that and we'll make this daily. And then we'll make this the SPX. And you can see that there's an inverse correlation to the SPX and the VIX, like right off the grip here. So we've been going higher on the left chart on this last swing, and we've been going lower in that same time frame on the last swing over here. And you can see way down over here when it was choppy and terrible, the VIX was up. So right out of the gate, you can kind of see that. And I don't have the Bollinger Bands on the left chart, but well, I don't want to flip it, but let's look at the SPX over here. You can see when the SPX actually was done with its move to the top. I actually have an arrow that prints right there when it goes out and comes back in. Now you can see it also goes out, comes back in, and continues its move higher during whatever that is there, 117, 118 up to 22. So a few weeks there, and then the sell-off comes down, and we get below the Bollinger Bands, and we come back up, and I print another white arrow. That's really to see kind of like these are volatility bands in some ways, and you can see when you get out of the volatility bands, you usually get hauled in, even if it's just for a sideways move, or you get a reversal. So there we're outside of the Bollinger Bands, and up here we're outside of the Bollinger Bands. So what you can be on the lookout for when you're outside the Bollinger Bands on a stock is to get hauled back inside and maybe back to the mean, which is either one of these two lines, depending on your time frame. So I hope that is descriptive, but really let's look at the VIX here, because it's outside the Bollinger Bands, it got hauled back in, then it got outside, and it's gone back in again. So what are we setting up for? Well, that happened over here, but it didn't happen that many times, and then we eventually got the sell-off. It happened back here. The VIX was going down and down and down, and then we got the reversal here, but then it kept going down inside the Bollinger Bands, which is interesting. And then we finally got a reversal on the VIX, which is, guarantee that if we scrolled over here, that's when the stock market was going down. So it's inversely correlated. It's just something to keep an eye on. Some people use this as a signal, but what you could say is that we should expect at least subdued prices into the next few weeks here. Probably something, but at the same time, it doesn't mean it has to spike quite like that. It can just spike back up to the middle a little bit, kind of like it did through these three sessions here. And we're going to watch the bullish percent indexes for signs of that same type of thing. So then I'll put that back on red. That ties these charts back together. I'll put this back on weekly, and we'll just do the regular update. So that was one thing I wanted to show. The S&P 500 today actually climbed up a little bit, and we are basically getting these little tiny candles, almost doji candles, and that's really, I think, still making a sign for potential a rollover here. And I still think we're going to probably come down here to the green line, which I think is a 50 period moving average, and um, that, or maybe even this blue line here. So so somewhere in this zone, and before this thing can get a chance to go back up again. And again, we'll watch the bullish percent indexes for clues outside of that. So that's the S&P. The Russell actually was down a little bit today, which totally makes sense. But we are 1, 2, 3, 4 dots into a squeeze that fired, and usually these things last 6 to 8 bars. So a pullback in this zone means that we could get some higher prices, and I'd be looking for that dotted line up there possibly as a top. We got the dotted line here at the top. That's when I took my position off the table that I had in TNA. Actually, it's a leveraged index product for the Russell 2000. Same difference. And anyways, that's what I'd be looking for, is possibly move back up into this zone up in here. And but I really kind of expect that to be after we get a little bit deeper pullback based on everything we were just looking at. So then we look at the Dow, which would, if you listen to the Bloombergs and that type of thing, they're like, well, the Dow eked out a gain today. Well, it's a little gain. It's nothing to write home about. And this is a high wave I think it's a high wave candle. It's a relatively big wave wick on top and a big wave wick on the bottom with a small body. That's practically a doji. So and then what else? The Nasdaq. And the Nasdaq's been red here. That is something to take note of. And we've got, I also modified the color scheme in here. It looks the same, but it's better. It's more consistent than what I had going in there. I had the standard squeeze colors going in there, and now I've just taken the same principle of what the squeeze colors were based on, and I really built it off of what the TrueMomo is actually doing. So I think it's actually going to be more consistent for my trading. So there you go. Just caught my eye actually. I think after you get 2 dark blue bars, that's a better signal to sell a position off or take profits than waiting for a third one, which happens to be when the TrueMomo rolled over. We got the TrueMomo rolling over here and then 3 bars. Well, that's a good signal to get out because the TrueMomo rolled over. So that's the kind of stuff I'm looking at, is trying to make my TrueMomo indicator just more useful for actually trading these positions. And by the way, it's got a upper reversal zone and a lower reversal zone as well. Okay. Oil, what did oil do today? Down 1.32%. And it's got a sell signal on the weekly and the daily as far as the TrueMomo indicator goes. So I've also eliminated the signals that are happening off of standard momentum if they're not in correlation with the direction of TrueMomo. So right now I've got a sell signal on daily and the weekly, and I actually took a small position in USO today, and I'm probably going to dump it right out of the gate on Monday morning. Although it's actually, we got a sell signal still going on the weekly, but the daily actually is holding, so I might hold it another day because this is the actual instrument that I'm trading. So until I get a signal on this one, I might just hold. Alright, TLT. We got the buy signal here in the last few days, and I bought a small position. I think I added to it a little bit today, but we're still bearish on the weekly. So this is all in kind of like just be prepared to have to exit is where I'm at. And the transports. I'm in IYT that should directly relate to the $ DJT, which is the actual transport index. So actually, I'll flip it over here to IYT. IYT went down by 0.43%, and the actual index went down by over 1%. So and it's all still, it's looking good. It's a relatively new signal to the upside. All right, that's enough for stocks today. Flip you over to the bullish percent indexes and stockcharts.com. The Dow flat. The New York Exchange up 1.29%. The transports flat. The NASDAQ, tacked on a new X today, up 1.24%. The SPX up by 2.57%, so that's actually pretty bullish. The OEX, which is the S&P 100, tacked on a new X today, new green X, 3.7% up. And the NDX up by 3.39%. So there's an awful lot of bullishness under the hood here, and that's helping really put some positive. At least it makes me feel better about a lot of my bullish positions, and it just aids really in the trading and the direction of the overall market. Alright, and then last but not least, these are our automated trading systems. I was going to open this up for the weekend review to show the whole year, but I didn't do that. I've got something else I'd like to get into with you. So this is the Dow futures contract, and lately it's been selling off and hurting our overall equity. This is our actual equity peaks and actual equity curve, and what happens to our equity. And this is in a quarterly contract from this one's 12/9 through 6/9. This is what it looks like. Yeah, it's getting to be the same 6-month period, so that's interesting. It's probably getting ready to be probably having to roll over into a new quarter. This is the Russell. And it's been, it was terrible back here. Then it took a nice pop, then it's sold off a bit, and now we're up in that new zone, which is nice. And we just need to continue to go higher from here and add on to our equity. This is what it looks like on a 6-month chart. This is what our NASDAQ looks like. This one's my favorite, and it looks the best on an overall chart and a longer term chart. And it has, these pullbacks are hard to take, but they don't last very long. It goes, I think that was a month right there. So you really had to deal with a couple weeks worth of major pullback before it started going back up again. This one felt bad for a minute too, probably maybe a week and a half, 2 weeks. And then I wanted to show this because this is really the report off of the NASDAQ chart. And I go into this a little bit on the site, but so I want to explain really what I look for here. I built this algorithm system with all this in mind, so I really don't even have to look back here very much. I concentrate on my equity curves. They still look fine. They've got the pullbacks that are expected. But if you really want to understand the math, this is max shares contracts held. So this is built for 3. I could easily build this for 1. And in fact, the one that we have on the website for sale is for 1 contract. That way everything is a third. So instead of making $95,000 in this period of time, which happens to be 6 months, you'd be in the neighborhood of $30,000. So, but you'd also have everything would be cut by a third as far as like risk and everything. So, so I look at that, and then this win rate here, it matters. It's interesting. This thing hovers anywhere between 40 and 60%, and it goes up and down based on obviously the actual trades that are happening. Right now, it's showing 179 bullish trades, 571 bearish trades. We've had more bearish activity in the last 6 months than bullish. So these will flip when you have a bull market. And right now, we're at 60% win rate, 59.89 on the short side, and we're 43 on the long side, and that'll actually improve normally as well. And so when you add all that together, every time this thing trades, it's in theory making $127 per trade, because you're winning and you're losing and you're winning and you're losing, and you add all that together and it comes up to $127 a trade, which is, I shouldn't say in theory because that's really what happens, but that's what the math is, and you're actually winning. Average winning trade here is 1100. Average losing trade is 1115. And in this case, you're winning more often than you're losing. There you got consecutive winning trades at 13 and consecutive losing trades at 7. So you put all that math together, and it's just statistics, and it shows a winning. Obviously, that's what goes into an equity curve that goes up like that. And then the real thing to pay attention to is this drawdown. And so I look at this number. I actually look at the worst number, which is this 23.7, and my account has to be able, for me to trade 3 contracts, I have to be able to withstand 3 or 4 times, and 4 is fine with me, of what that max drawdown is, so that I essentially never get close to basically not being funded and not being able to go back up again. That is a big deal in how these things trade. The actual system up somewhere in all of this, it says what your required system is. Where is that? It's here somewhere. And they actually use like the loss on 1 contract, I think. So it's like, well, that's not going to work. You actually have to look at your worst numbers, and then you have to give it plenty of cushion, and that's where I say 3 to 4 times. And then since I trade 3 systems, I actually have to put those 3 times together for 3 systems and have enough capital to be able to withstand that. And this is where it's actually showing you 5 months, 25 days, 1 hour, 23 minutes, 57 seconds worth of trading, and the average time it's in the market and the average time it's not in the market. So there you go, right there. So that's that. I hope that helps everybody understand. This is also the mathematically inside when you're getting stopped out of a trade, and I've got all that built in. That's how the long and short categories work. So and then the total. So I hope that helps everybody understand, and I'm going to leave you with that for the weekend. Have a great weekend, and we will talk to you next week. Take care, guys.